Hello and welcome to another update video about the dollar index, the DXY. Yeah, it doesn't really offer us new clues as to whether the DXY has already completed its wave 2 corrective rally here on the 13th of February, yeah, or 14th of February, Valentine's Day, or well, it could be complete that rally. It's certainly large enough, this wave 2 corrective rally. Remember that we highlight at the moment primarily this wave count here, in which a B wave topped on the 3rd of October. And we're now coming down in wave C, sort of into the low $90 region, would be my preferred scenario. But in this C wave, we're looking at a 5-wave decline. So we have the wave 1 basically complete. The wave 2 rally, well, it reached the golden ratio level. It reached a 61.8 retracement there of the wave 1. That's certainly enough. However, what we need to see is a 5-wave move down, and we need to break below initial support. So that still hasn't happened. I don't see a clear 5-wave move down. It's too messy for that, and it rather looks like a 3-wave move down. In addition to that, as mentioned in the last update, I really needed to break below the $102.90 level as initial confirmation that wave 2 is topped. That hasn't happened yet. Yeah, we've broken the trend line, but that's not a very reliable one anyway. And again, ideally, we are forming a top in this region. I mean, it's reached the golden ratio. Surely, it could still stretch a little higher, but then it would turn into a very complex correction, possibly even a DXY pattern. And that can also be seen as maybe a 5-wave move up, which would then maybe even make us consider something different, like an alternative perspective that we can talk about as well. But for now, as long as we stay in the resistance range, which means below 105.88, the focus is, well, I would say overall, I'm watching at least for downside. But of course, the trend is up, as you can see, since the December lows. So trend is up short term, but this is the area where I'm watching for a reaction. The upside hasn't really slowed down. It's not really slowing down. So it can absolutely be the case that we continue to move higher. I mean, it's essentially still printing higher highs and higher lows, but it hasn't. But it hasn't given us an indication it's topped. So the trend is still up, right? So that's the perspective that one needs to take. The trend is still up, and short term, the trend can continue to go up until we finally see that signal. The thing is just that from a tactical point of view, this is the area where we need to be watching for a top. Yeah, what happens if we break above resistance? Well, that would then mean, oh dear, we have to still see this wave B as in the making. It would be a very complex one. You see that when we zoom out a little bit further, that, I mean, this B wave hasn't even by far maxed out what it could do, right? I mean, we have an A wave down. This was the B wave, but absolutely, I mean, it's possible that this was only like the A wave of the B wave. This move down was the B wave of the B wave. It looks more like a 5-wave move, but possibly a DXY. And then we're moving up in a C wave of the B wave. And actually this B will then sit here. And then we move down. That would, however, mean probably much more sideways action for an extended period. So yeah, that's essentially what we're watching. It's interesting that, for example, a lot of people are always saying like, when the DXY is going down, the markets are going up, like the S&P. It's obviously not the case. I mean, the markets have been going up for a while now, and we're just moving sideways here. This is just trending sideways. So people are saying that, oh, if the DXY is expected to go down, but at the same time, the SPX should form a top at some point, as in my analysis, I'm watching for. That doesn't work. Well, I mean, why not? It's working now. I mean, now they are not really correlated or inversely correlated. So it could be that they're both dropping at some point. I mean, that's correlations come and go, right? So don't use it for correlations necessarily. It doesn't work. They come and go. So essentially here on the DXY, we're just watching for a potential top to form. Could also form a head and shoulders pattern, which, yeah, often is a reversal pattern, but they can also work as trend continuation, like moving down, left shoulder, head, right shoulder, continue. They can be continuation patterns. It's rare though, but they can be. But yeah, I don't really use these patterns. We use the Elliott waves, and it tells me, you know, what is the level that if broken, you know, it tells me I have to expect a further move to the upside. At the moment, as I said, it's crucial to see the trend as up. So I see the trend as, yeah, the trend is up in the short term, at least the multi-hour trend is up, and it can continue to go up. I need to see a signal now that the trend is broken, and I gave you the level for that. And ideally that's broken to the downside in 5 waves, then ideally followed by a break below the red line. Then we talk about $100.70, which is quite far away from where we are now. But yeah, this is essentially the pathway the bears need to take. But it's become quite boring here, this DXY. That's an update about that DXY as we're heading into a new trading week. Hope you liked the update. If you did, please hit the like button, leave a comment, and subscribe. And if you're interested in daily updates about the S&P 500 as well as updates about stocks, then check out our S&P 500 and stock service. You'll find the link in the description. Thanks a lot for watching. Bye-bye.